Today's the 1st of May 2021. My name is David Hickson, and in today's market update we're going to be taking a look at the price of gold. Before we do that, I must ask you to please make sure that you have read and understood these disclaimers. Gold is a really fascinating instrument to analyze using Hurst Cycles, and in the Cycles course that Hurst wrote way back in the 1970s, he dedicated a whole section of the course to gold because of the fact that he suspected that the cycles which influenced gold might be slightly different to the cycles that influence stock markets. Now, he was looking at cycles which were synchronized at their troughs. And here, in fact, I'm displaying cycles synchronized at their peaks, so let's change that. There are the cycles synchronized at their troughs, plotted on the chart in the way that Hurst did, with the diamonds at the foot of the chart to indicate the position of the cycle troughs. Because one of the fundamental principles that Hurst discovered when analyzing the price movements of stock markets was that the cycles that influence those prices are synchronized at their troughs. But now gold presents an interesting challenge for any Hurst Cycles analyst, because of the fact that it exhibits a slightly different type of price action. I'm not going to spend too long discussing it in this video. I've mentioned it in several of my previous videos about gold, but gold demonstrates the kind of price action that you see if the cycles were synchronized at their peaks. In other words, we tend to get sharp and isolated peaks forming in the price of gold, and we get rounded and clustered troughs. You can see that particularly way back over here on the left-hand side of the chart, whereas the reverse is true in the case of stock markets. And so it seems to me, and I should point out this is purely an assumption that I've made, it's not something that Hurst ever mentioned, but it seems to me that it is possible that the price of gold is influenced by cycles that are synchronized at their peaks, which is in fact why Sentient Trader has the ability to perform an analysis making the assumption that the cycles are synchronized at their peaks. And as a result, we have the analysis plotted at the top of the chart where we have triangles which represent the position of the peaks of the cycles, as opposed to at the foot of the chart with the position of the troughs of the cycles. But now Hurst spent a long time in his course, as I've mentioned, explaining how he felt the cycles worked in terms of gold, and he discovered in particular that he thought that the cycles in gold were probably longer than the cycles that were affecting the stock markets that he had analyzed. And so a really interesting thing happens when you perform what I call a dual analysis, where we have two separate analyses on this chart. At the top of the chart we have a peak analysis, and at the foot of the chart we have a trough analysis. I should point out that a dual analysis means that we are actually performing two analyses on this chart. One analysis identifies cycles that are synchronized at their peaks, and the other analysis identifies cycles synchronized at their troughs. This is not one analysis. There is a lot that I could say about this subject, but one of the results of performing an analysis in this way, or performing two analyses in this way, is that sometimes you end up with a trough of a major cycle, in this case a 9-year cycle trough, which is happening at almost the same time as a peak of the same cycle. That's a really interesting anomaly that sometimes happens when you perform this kind of dual analysis, and it often raises questions, because if there was only one analysis, then you would assume that the peak of a cycle, in this particular case the 9-year cycle, would occur roughly halfway between the two troughs of that cycle. So there are two troughs. I've drawn a rough semicircle, and so you would expect the peak of that cycle to occur somewhere in between those two troughs, and of course here is a peak, and in fact it is also found to be a peak in the peak analysis. But one of the benefits of performing a dual analysis is that we can use a tool in Sentient Trader that I call the Zig Zag Tool in order to understand what the implications are of the combination of the two analyses. So we're going to be taking a look at that in a moment. But before we do that, let's consider what this analysis is actually telling us. First of all, in terms of a big overview, we have a 9-year cycle peak over here in 2011, and we have another 9-year cycle peak over here in 2020. In my previous video about gold in early February, I presented the fact that the average wavelength of a 9-year cycle, according to the research that Hurst did into stock markets 50 years ago, had a length of 3,276 days. And if we measure the length of this cycle from peak to peak, making the assumption, of course, that the peaks are synchronized and not the troughs, then you can see we end up with a length of 3,260 days. So in fact, it was only 16 days short of the average 9-year cycle period, which increases my confidence in the fact that this was probably a 9-year cycle peak. Having formed a 9-year cycle peak, what do we expect the price of gold to do? Well, of course, we expect it to decline into a trough and then rise up again into the next 9-year cycle peak. That's in very broad terms. In slightly more refined terms, we expect price to make a W shape. So it will come down into a trough, then it will come up into a peak of the 54-month cycle, then it will come down into another trough, and then it will rise up into the next peak of the 9-year cycle. Of course, that W shape is not going to be anywhere near as simple as the W shape that I've drawn there. And if we take a look at the previous W shape, you can see it over here. There it is, and that's it over there. So it'll be a slightly skewed W shape, but that is the basic idea. So let's zoom in and take a look at a little more detail. There is that 9-year cycle peak in August, I think it was, of 2020. And focusing for now only on the peaks, you can see that we have a 40-week cycle peak that price is probably moving up towards at the moment. And then over here we have a very staggered nest of lows for the 18-month cycle peak. Why is that so staggered? Well, it's because the cycle wavelengths are fairly dynamic, of course, they're not absolutely fixed, and with each wave of each cycle we're able to measure the wavelength, and these circles and whiskers are projected on the basis of the recent average of those cycles. And so when cycles contract or expand, we end up with a staggered nest of highs or nest of lows. But now I mentioned that there is an advantage to looking at both a peak and a trough analysis, a dual analysis, which of course we are looking at on this chart, by applying the tool which takes the dual analysis and creates zigzags. So let's take a look at that. First of all, a quick disclaimer. The zigzag is not something that Hurst ever mentioned. It is simply a tool that I discovered, which is a useful way of understanding the way in which these two analyses on a chart tend to interact. This is how it works. I observed that when you have two analyses, price will tend to move from a trough of a particular cycle up to a peak of the same cycle, and then back to a trough of that cycle. Now, that sounds fairly obvious, but let me demonstrate the way in which that happens. And let's start this by taking a look at the 40-week cycle. That's this pale green cycle over here. And so here is a trough of the 40-week cycle, and here is a peak of the 40-week cycle, and here is the next trough of the 40-week cycle in early March of this year. And so in general terms, price will move from the trough of the 40-week cycle up to the peak of the 40-week cycle, and then down to the trough of the 40-week cycle. It sounds fairly obvious, but bear with me for a moment as I explain how it does that. When price moves up from a trough towards a peak, the first thing that it will do is it will move to the next longest cycle that needs to form a peak before the peak towards which it is heading. So it is heading towards this peak over here, which is, of course, the 40-week peak. Okay. What is the next longest cycle that needs to form a peak before it reaches the 40-week peak? Well, if we take a look at our peak analysis at the top of the chart, you can see that the next longest cycle that needs to form a peak before the 40-week peak is this peak here, the 80-day peak. And let me plot that on the chart. There is the 80-day peak. So the first thing that price will do is it will move up to that 80-day peak. Having reached the 80-day peak, it will then move down to the longest cycle that needs to form a trough before the peak towards which it is heading. So remember, it is heading towards the 40-week peak over here. What is the longest cycle that needs to form a trough before we can reach that peak? We get that information from the foot of the chart over here, and you can see that the next longest cycle that needs to form a trough is also the 80-day cycle, and there it is over there. And so price will move down to the 80-day cycle trough over there. And then the next thing that it will do is it will move from that trough up to the final peak that it is heading towards, which is of course what it did over here. The result is this three-legged movement, which I call a zigzag. And the interesting thing about that zigzag is that you can use the zigzag to calculate a target, both in terms of price and time. And that target is generated very simply by plotting a line from this trough over here, and I'm going to just do it very roughly here. I'm going to use a dashed line, and you cross through the middle of the center move of the zigzag, and you extend that line upwards, and that gives you the target. I've obviously just done it very roughly over there, but that's the target for your price and time for that move. Those of you who are familiar with Andrew's pitchfork, which is a method for generating targets for price moves, will recognize that this is exactly what an Andrew's pitchfork tool does as well. So that is the first example of a zigzag. What is the next thing that happens to the 40-week cycle? Well, we're moving from the 40-week cycle peak over here down to the 40-week cycle trough over here. What is the first thing the price will do? Price will move down to the longest cycle trough that needs to form before the 40-week cycle trough towards which it is heading. Okay, so in this case, we look at the foot of the chart, that is this 20-week cycle over here. So the first thing that price will do is that it will head down towards the 20-week cycle trough. It goes down to the 20-week cycle trough. And the zigzag tool is a fractal tool. So for every one of these moves, you will see that let me choose a different color here. For every one of these moves, it performs the move in its own little zigzag. Okay, let me go back to the yellow color. Having formed the 20-week cycle trough, what is the next thing price will do? Price will then move up to the longest peak that needs to form before the 40-week cycle trough towards which it is heading. In that case, if we look at our peak analysis, that is the 20-week cycle peak, which is over here. And so price will move towards that 20-week cycle peak. Again, notice how it does that move in a similar zigzag. And if you take a look at each one of these zigzags that I'm drawing, you will see how a target for each one of the moves can be calculated by the central leg of the zigzag. Having reached this 20-week cycle peak over here, price then turns down and completes its journey into the 40-week cycle trough. Again, it does that by means of a zigzag move downwards. And again, we can calculate the target for that move by, and I'm going to use the same color here, simply drawing a line from the peak through the center of the middle leg of the move all the way down to the trough over there. And that is how the zigzag tool works in Sentient Trader. It's a very useful tool, I have found, when you have a dual analysis on a chart. So what does that tell us about what's happening at the moment? Well, for each and every cycle that we have in our analysis, we can create the zigzags and we can start to project targets. Of course, this becomes a little complicated because we have so many cycles. I'm not going to do it for each and every cycle on this chart, but let's focus for now, first of all, on this 40-week cycle. The 40-week cycle formed a trough over here. It then needs to reach up to the peak of the 40-week cycle. But where is the peak of the 40-week cycle? Well, we don't know yet, but we have a nest of highs over here. And in terms of the zigzag, what is the 40-week cycle going to do? Well, it's first of all going to move up to the longest cycle that needs to form a peak before the 40-week cycle, which in this analysis is this 80-day cycle over here. That 80-day cycle formed a peak at that point, which means that's the first leg of our zigzag moving up to the 40-week cycle peak. What is the next thing that price is going to do? It's going to come down into a trough of the longest cycle that needs to form a trough before the 40-week cycle peak, which in this case was the 40-day cycle trough over here. So price came down there, and then in its third move it will head up, and we can again calculate our target for that zigzag. Fortunately, we don't need to do all of this manually because Sentient Trader has a Zig Zag tool. And there is the zigzag for the 40-week cycle. Here you can see the zigzags that I drew manually myself a moment ago. Those are the ones in the past. And this is the current zigzag over here plotted on the chart. And you can see the target for this 40-week cycle move is over there. Let's add one more cycle, the 18-month cycle. And we can see how these cycles work together in terms of the Zig Zag tool. Here is the current 18-month cycle zigzag. Here you can see the 40-week zigzag zigging and zagging about that first leg of the 18-month cycle move. Here is the next leg, and there are various complicated reasons that I'm not going to go into right now in terms of why that peak is over there. This zigzag tool is going to resolve fairly soon once this 40-week cycle peak has been found, and it's going to generate a slightly different target. But you can see the message in terms of this zigzag tool. The general message is the price is now moving up into a 40-week cycle peak. We need to be standing by, ready for that 40-week cycle peak to occur in the markets. Here is the nest of highs. Here you can see the circle for the 40-week cycle, which is in the past, indicating that 40-week cycle peak is probably overdue, which means it might happen at any time. We are certainly approaching the point at which the 40-week cycle peak should form. It might have formed already in the market. After that, price is going to turn down and come down into the 18-month cycle trough, which we are expecting over here at the end of this year. As price action unfolds, the targets for these zigzags can be calculated more accurately. And of course, once we have completed the second leg of the 18-month zigzag, we'll be able to calculate the correct target for the downside for the 18-month cycle trough. There is one final point that I must make about this zigzag tool, which is that it is based upon the analysis that we have on the chart. And you will notice that here we have, as I've already mentioned, a very staggered nest of highs for the 18-month cycle. Let's focus just for a moment on the 40-week and 18-month circle and whiskers in terms of the peak analysis. Notice how they are almost exactly above the circle and whiskers for the 18-month and 40-week cycle troughs. This is the anomaly that I mentioned earlier when you have a dual analysis. It is something that you will sometimes see on your charts. Now the rest of this nest of highs, as you can see, is displaced to the right, indicating we are expecting that synchronized peak to occur later than this trough. But this video would not be complete if I didn't point out that it is possible that the 18-month cycle peak actually occurs before the 18-month cycle trough. And of course, if that happens, we're going to have a very different zigzag playing out. That zigzag would have this rise up to a 40-week cycle peak over here, then the drop into the 20-week cycle trough over here, followed by another stronger rise into this 18-month cycle peak. Which one of those two options is going to play out? At this point, I cannot say with absolute certainty. It seems likely, because of the analysis that we see on our chart, that this 18-month cycle trough is going to occur before the 18-month cycle peak. But with every single bar, as the price action unfolds, we are going to be able to refine our understanding of what is happening. And if this second, slightly less likely scenario turns out to be what is happening, we will be ready to adjust to that situation as soon as it becomes evident. I do hope you found this market update interesting. If you have any questions, please put them in the comments below the video. I look forward to hearing from you.